皆さんありがとうございます。大事なお時間をいただきまして。そうですね、JCSS はフルサービスファームとしてですね、マーケットリサーチ、ビジネスのフィーサビリティスタディ、デューデリー、あと会社設立、で会社のいろんなコンプライアンス、で、法務とか、あと普通の会計、監査などを、行っているフルサービスの会社でございます。2000年、ちょうど2000年ですね、の2月に設立して、ちょうど、22年になるところなんですが、約400人の会社であり、日系企業様は、日系のお客様は約、現状のお客さんですね、70社、です。延べ100社以上なんですが、で私が JCSS ジャパン日本の代表をしておりまして、このようなですね、横浜インドセンター様の、ウェビナーを、定期的に、講演しております。今回は、弊社のですね、本社からアンクッシュ、M&A の、専門プロであるアンクッシュさんが、今日の、テーマを講演しますので、皆さんよろしくお願いいたします。所さんどうぞ。
はい、スレッシュさんありがとうございます。今ですね、スレッシュさんの説明にもありましたが、本日の講師は、JCSS コンサルティングからアンカッシュビチ氏をお招きしております。アンカッシュ氏は JCSS のアソシエイトディレクターを担っておりまして、クライアントの M&A 取引を管理する15年以上の経験を持つ公認会計士で、評価、デュデュリジェンス、企業再編、外国為替規制、ライトマス実装のサポートに特化した M&A プロジェクトでの多数の実績をお持ちでいらっしゃる方です。本日のセミナーは英語での説明となります。12個あるアジェンダを大きく3つのブロックに分けて説明させていただきます。各ブロックごとにおけるポイントを簡単に私の方で日本語で説明させていただきます。で時間割の構成上、質疑応答の時間を設けることが難しくなる場合も想定されますが、最後にアンケートの画面にご入力のご協力をお願いしますので、その際にご記入いただければと存じ上げております。はい、それでは、早速なんですけれども、アジェンダのナンバー1からナンバー4ですね。アンカッシュさん。Thank you。はい。それではこちらのアジェンダの方の、説明を早速させていただきます。この最初のブロックのアジェンダのナンバー1から4では、インドにおけるここ2、3年の M&A のトレンド、留意点を説明させていただきます。インドではユニコーン企業に投資する傾向が今増えてきていまして、ユニコーン企業は未上場でありながら、評価額が10億ドルを超える創設10年以下の企業のことと言われております。ユニコーン企業数は現在、インドはUSA、中国に次ぐ世界第3位で42社が現状のようです。でこのインドの会社への投資では、特にディープテクノロジーですね、技術の真相部分を担う企業への投資が盛んとなっております。でこの背景にはインドに大きな市場がありまして、投資家の意欲がさまざまな会社への投資意欲となっていることも反映しています。また、投資側に対しての政府からのサポートとして、業界整備の支援、法律上の免除が日々強化されてきています。個人情報保護の確立も進んでいることなど、投資環境もこちら進んでいるインドの現状について、説明の方をさせていただきます。さらにこちらのブロックの中で M&A におけるキードライバーについても説明させていただきます。M&A のパターンや企業合併についてのキードライバーやインド特有になるかと思うんですけれども、合併ですね。この場合には政府の許可が必要な場合などもあるっていう法律上の留意点についても、説明をさせていただきます。それではアンカッシュさん、よろしくお願いいたします。アンカッシュさん、please explain number 1 to number 4.
Thank you, Dr. San. So we are presenting a bird's eye view of the major transaction types in M&A especially from a private mid-market segment in India. I'll just quickly take you through the agenda for our presentation. I think Tokoro-san took you through the first part of the agenda, which is to look at the key trends in 2021. What can we look ahead to? What are the key drivers for M&A, and then the main M&A transaction types. Now, what are the key trends that we have seen in 2021 from an Indian perspective? I'll start off with the industry first. Now, 2021, in a sense, was a defining moment for IPOs in India. So Zomato IPO was one of the largest IPOs that we've seen in 2021. It is also indicator of the fact that companies of scale were able to actually access public capital. So long, for so many years, they have been actually growing and have had access to private capital. Now they have got to a point where they're able to actually access the public markets as well. Exit environment in India has been very good in the last year. We have seen a record almost of a $30 billion in exit from 165 companies in India. This is as per a report from VC Circle and from Traction. India also created 42 unicorns in the last year, out of a total of 84 unicorns that are there in the entire history of the Indian industry. So there were record VC inflows that led to this growth of the unicorn thing. So it's also a very broad-based growth in the sense that we have a fintech company which went public. We have a delivery company like Zomato that also went public, and we have Policy Bazaar. So this growth has been a broad-based growth. And unicorns now are no longer mythical creatures. There are almost about 42 of them that were added just in the last year. Another trend that we have seen is this deep technology adoption, which has happened. So there are hundreds and millions of smartphone users now in India, and with the government giving encouragement to UPI-based transactions have gone up. Working from home actually has also positively influenced the digital adoption in India. One other trend that we saw was an external event where China literally turned into a nanny state, first cracking down on the fintech industry with stricter norms, and then on the edutech industry. A good indicator of this is, back home in Japan, SoftBank, which invests normally about 23% of its total investments in Chinese businesses. In the year 2021, their CEO Mayoshi-san, he said that until April, only 11% of the new investments were in Chinese companies. So there's some flow of investment that has also turned to India on account of these crackdowns. Regulatory level, we have seen FDI caps, which is the limit that is put by government on investment in certain industries. Those have been removed, like in the case of insurance intermediaries. Another important change has been in the area of CCI. CCI is a Competition Commission of India, and it is an antitrust organization. In the wake of these events that happened in the last 2 years, CCI has actually created a green channel for mergers to happen quickly, where these mergers do not have any significant impact on the competition. So that is what is referred to as CCI Green Channel. Been a major liberalization or a decriminalization of the offenses or non-compliances under Companies Act in India. There was earlier the Companies Amendment Act 2019, which decriminalized almost 16 offenses. And now there is the bill in 2020 that has come up, which almost looks to decriminalize about 54 offenses under Companies Act. This one other change on the regulatory side that has happened is stamp duty is one cost which has come up on the transfer or issue of dematerialized shares as well. In the past, only physical shares, when exchanged, there was a stamp duty applicable. Now this has been applied to dematerialized or non-physical shares as well. One other development on the regulatory side has been this personal data protection bill that has come. The government has introduced it. and it may have an impact on certain key industries like the financial technology industries, e-commerce, and also healthcare sectors. Now, looking ahead from an Indian perspective, what can we expect from India? We see that businesses that are backed by intellectual property, by technology and technical know-how will continue to see a lot of interest. There's also a changing environment in India where mid-sized companies, which were earlier holding back due to valuation or financing challenges, they're also coming up a lot, and there are a lot of transactions happening in the mid-market space. Companies now, one of the unique things about India right now is it is one of the few economies in the world which is growing at a rate of more than 5%. And around 80% of the growth is to be fueled by the domestic demand, consumption demand in India. So in that sense, in any fundamentally strong business model, we'll see a lot of interest in India from a consumption standpoint and also from a growth standpoint. Despite global headwinds and weak macroeconomic indicators, M&A activity in India is showing good resilience. There is a continued disinvestment of government-owned companies. There's a growing confidence in insolvency regime of India. And we are seeing a lot of appetite for buyout deals and domestic consolidation in the country. So that's just to give you a summary of what's to look ahead in the coming year. This process might continue. Now, what are the key drivers for a merger or an acquisition? Typically, these can be put into some 3 or 4 major reasons. The first one is, of course, synergy. So when I acquire a company or 2 companies come together, there are possible synergies in terms of operating revenues, in terms of financial health and financial strength. There is also the case for inorganic growth in a knowledge-driven industry like India. It is always an effective strategy for to acquire companies by existing businesses, because there is a high entry barrier in terms of being very capital intensive, or the spending on R&D is pretty high. So for businesses that are looking to expand rapidly, there is a lot of sense in making inorganic growth through these transactions. The other reason for a key driver for M&A is corporate carve-outs. There are businesses that are looking to break out and unlock value in the businesses. So businesses are therefore moved out of one company into another and then independently grown. Also, the need for de-risking shareholder risks. So this may basically involve diversification of businesses in the same value chain or across different businesses, such that the risk of the shareholder is reduced. And one other driver that we've seen for M&A is also regulations. Sometimes regulations require you to keep businesses separate or not be able to move certain businesses, keep them together. That is another trigger for companies to look at M&A transactions. I will take you through the major transaction types that we see in India. This is particularly again in the privately held mid-market segment of India, and which laws apply, and which kind of structures are in vogue. So in an M&A, you have one type is an acquisition where we do a simple share purchase or an asset purchase, and the other type is called a merger, where 2 different companies merge together. Now, the difference between these 2 transactions is the acquisition is a private transaction, whereas a merger is a government-run process where I have to seek approvals from the government bodies. In case of acquisition, there can be a share sale where I can just purchase shares. There can be an asset sale where I can buy assets of the company. There's also another type called HR transfer or acqui-hire, where I'm just looking to get people. The asset sale, I can buy individual assets or I can buy the entire business as a whole. So there's a difference between an itemized, item-based asset sale or a complete business is taken together, and bought over. In a merger, we have companies coming together as merger. There is the other side, which is called demerger, which is 2 companies break down and have 2 different businesses. Now, as I said, the acquisitions is more of a private transaction between 2 parties, whereas in a merger, the 2 parties come together and then they apply to the government regulatory body for seeking an approval for the proposed merger. Now, in the foregoing section, we are going to study some case studies on some of these transaction types. So we'll do a case study on share sale, we'll do a case study on a business transfer, and we'll do a case study, a small case study where we just talk about our experiences, in these kind of transactions. Before I again give it back to Tokoro-san, I will just take one more slide to talk about the regulatory framework. What are the different laws that apply in the M&A field? There is the Companies Act, which is the primary law for governing companies and for M&A. There is Foreign Exchange Management Act, or FEMA, which is largely it is regulating the moving of capital inside India and outside India. So the capital flows is governed by FEMA. There is the Income Tax Act, which is governing the tax treatment of various M&A transactions. There is Insolvency and Bankruptcy Code. This is typically required for this law works in the area of auction sales under a corporate insolvency resolution process. Another important law is Competition Act. Competition Commission of India is the regulator, and they are established to accord antitrust approvals. Over to you, Tokoro-san. I would request you to please take it forward.
はい。アンカッシュさん、ありがとうございました。それでは次のブロックの、解説の方させていただきます。次のブロック、アジェンダナンバー5から、8では、昨今による買収のケーススタディについて説明させていただきます。買収におけるインド特有の保険を含めた買収のケーススタディ、事業企業譲渡によるインド特有の税金関係の注意点や企業合併における留意点についてとなります。この企業合併において、会社法審判所、英語で言うとナショナルカンパニーロートリブナル、略して NCLT というインド政府機関が関与してくるようです。それではアンカッシュさん、引き続きお願いいたします。アンカッシュさん、please explain number 5 to 8.
Sure. We will start off with the share transaction. Let's say a share acquisition, what is normally referred to in the market as a company A having bought shares in company B. So let's look at the example. There is a company in India. Let's say we're calling it the Indian company. It has existing shareholders in India. Those are the promoters of the company. And let's say that we have a company in Japan who's looking to invest or acquire this particular company through a share acquisition. Now, what are the two ways in which acquisition can happen? If this is a partial acquisition or a joint venture, then the investor can directly put money into the Indian company. So there is the flow of capital directly into the Indian company. If it is let's say a complete takeover, 100% takeover is where the investor can actually buy out the entire shareholding from the existing investors. So what we refer to as primary and secondary. Now, once this is done, how does the shareholding looks like, or the shareholding structure of the company looks like? You will have the Indian company with the existing shareholder, let's say, holding some shares, and the shares invested by the investor or the buyer. Now, what are the key considerations that we have to keep in mind when approaching a share acquisition transaction? So the decision on whether we are doing a partial acquisition or we are doing a complete acquisition. So partial acquisition could also mean a JV. A JV can happen in the original seller company. It can also be through a separate company. So these are some decision points that we have to decide on whether we are acquiring the company completely or a partial acquisition. What type of instrument will the investor take on? So whether it will be pure equity shares or it could be some kind of a convertible security. The consideration we spoke about already is the primary investment versus the secondary investment. The one way to distinguish primary and secondary is when the money goes into the business is when it is looked upon as a primary investment, and a secondary is where the transfer is happening between the shareholders. One another important decision point that normally buyers look for or investors look for is a board representation. Typically in India, at least 2 directors are needed on the board. So the buyer will decide on how many director representations they need. At least 1 director in the board is something that is recommended. Then as part of the shareholders agreement, the buyers will normally talk about certain reserve matters. If there are any important decisions that have to be made in the company, the buyer will require that these decisions are first brought to the shareholder, to the investor for their consent. So those are certain reserve matters which will have to be negotiated with the partner in India. Also, a planning on the overall takeover or exit. So over a period of time, I may acquire all the shares of the company. So from that point of view, I may agree today as to what mechanism I will use to acquire the entire shareholding and how I will exit from the company if that is the case. Another, last but not the least, is the dispute resolution mechanism. Normally, we've seen that investors from Japan, they prefer to have Singapore as the arbitration location for the companies in India, so as to have better negotiability or even enforceability for the terms agreed in the contracts in the India company. I'll take a case study on share acquisition. This is a very interesting example where we had an Indian company which was a financial technology company. It was a startup. It was negotiating a Series A investment from a VC fund. The investors wanted to put money directly. The investors were for Singapore. They were a Japanese VC, and they were looking to put money into the Indian company. Now, as part of the agreement, the founders have to make several warranties because they are also in a fintech environment, which is very regulated environment. So they have to make a lot of representations about all the compliances as per the law in India. Now, there are some risks around what if the founders have not provided all the information to us and there's some past non-compliances. We made in this case, we introduced the concept of a sell-side insurance, where the Indian company took an insurance policy against any liability that may come up in the future, where it can be compensated. The Indian company can take an insurance and be compensated for it, which helps the investor so that there is no risk on the investor. What is this? This is referred to as a reps and warranty insurance. So I just talk a little bit more about the concept of R&W or reps and warranty insurance. Like I said, there are risks associated with investments such as undisclosed issues. And we as an incoming investor, I would know limited things about the other partner in India, whether they have the ability to pay for any breach of warranties. So there is the introduction of a concept of R&W insurance or reps and warranty insurance. It can be either bought by the investor directly, that is the buy side policy, or it could be bought by the seller, that is the company, on a sell side policy. So one key difference between a buy side policy or a sell side policy is that in the case of a fraud, the buyer can take an insurance policy directly to shield itself from any fraud happening in the Indian company. In a sell side policy, normally insurers don't cover frauds because I cannot directly take an insurance for a fraud that I may conduct. So from that point of view, this is a slight distinction between the type of policy. So in this case, the investors were very pleased that we were able to offer an insurance from the company for any liability of the company. This also shielded the promoter from his personal assets from any kind of sticking on for these kind of liabilities. So one advantage of taking a M&A insurance or a reps and warranty insurance is where you're able to improve your counterparty risk. So as I'm investing, I am more secured about the investment by taking an insurance. Another example I'll talk about is a business transfer agreement. This is the asset transfer. So what happens here is, let's say we have a company, we are calling it the seller company, and its existing shareholders are referred to as seller shareholders. Now this company, let's say, has two businesses, business A and business B. And as an investor, I am interested in business A. So I enter into a business A sale agreement where seller company will just transfer the A business into the buyer, and I will pay consideration. The Indian company will pay consideration to the seller. So what happens as a result of this is you have the seller company, which is only with the B business, and the A business is transferred into the buyer company's subsidiary in India. This is a local transaction. This is a transaction happening in India. So we need to have the buyer normally will have some kind of a subsidiary already in India, which will make the acquisition locally. Now, what are the key considerations around this? So this is basically when a business A is being talked about, it is talked about as lock, stock, and barrel. So it includes all the the manufacturing facility, customers, employees, vendors, all other assets. Intellectual property is transferred in one group from one company to the other. Generally, consideration for or sale consideration for business transfer is usually paid in cash. There are also cases where companies issue shares as consideration instead of cash. This is a very time efficient model because it's a private transaction. It happens between two private parties and there's no requirement for an outside approval. In the seller company, there will be some income tax. So if the seller company has, the business value is 100 rupees and the cost is 50 rupees, 50 rupees will get taxed as capital gains in the hands of the seller company. A small case study for business transfer agreement. So we have here a company A, which is into software development, and it is also into data processing. Now, company A built a product. That product is referred to as a payment switch, and it wanted to basically unlock value in the product. So what company A decided was it will establish a subsidiary. So we now have company A, it has a software team, people, and it has product. So the company A formed another subsidiary below, company B, where the product business was moved to the subsidiary company. The consideration was issued in the form of shares. And then later in company B, we got the buyer to come in, and buyer completely bought over the company B over a period of time. So this was a case where through the BTA, we were able to take out a business into a separate company, and then it was sold to a investor or a buyer. This is the overall bird's eye view of a business transfer agreement. Next, I will talk about the merger, which is the NCLT based approval route. In a merger, two companies come together and there is an approval under law. I'm referring to the company in India as a seller company or a transferor company, and the shareholders that are there are the transferor shareholders. We have, let's say the company has business A, and we are a buyer, a Japan-based company. It has a subsidiary in India. We are running another business, the business B. Now, what we are doing is we are interested in buying the business A and merging it into the company in India. So we do enter into a scheme of merger, what is referred to as a merger scheme, where company A will get merged as an entity into company B. One interesting variation here is that the consideration is paid not to the company, but to the shareholders of the transferor company. So this is the model for a merger typically where business A is moving into company B, but the consideration goes to the shareholders. What happens as a result of merger is that you will have this company A will get wound up automatically. There's no separate liquidation process required. And you will have the India subsidiary, which will have both the businesses, business A as well as business B. What will happen as part of this is the shareholders, the transfer company shareholders become shareholders in the Indian company. Now, some of the key considerations here, what are the key factors in a merger transaction? We have to, it's a document where we have to define what is the reason for merger, what is the rationale for merger. We also have to talk about a direction of merger. So whether it is company A merging into company B or company B merging into company A, that direction has to be decided. It is normally dependent on the size of the business, the value of the business. Those are some of the indicators for deciding the direction of merger. There are some key definitions or key terms that we refer to in a merger document. So we talk about the consideration, which is the price to be paid to the shareholders of the transferor company. There is a concept of swap ratio, which means number of shares in the transferee company that needs to be given to the shareholders of the transferor. There is the concept of appointed date, which is the start date, cutoff date for merger. And there is effective date. Effective date means when does the approval come from NCLT. And then there is the concept of record date. Record date is the date on which shareholders have to be clarified, and the shares have to be issued to the shareholder company. And then another important aspect of the scheme of merger is the accounting for mergers. Like I said, the NCLT application has to be made if the companies are in different states in India. There are different NCLT offices. So one thing that we check, we do a due diligence before the merger to check if both the companies are in the same state, so that we only have to apply to one NCLT office instead of applying to different NCLT offices. As part of the merger approval process, we have a board meeting approval, we have shareholder approval, we have creditors approval. These two approvals have to be taken for both the companies in order to go forward with the process of merger. Now, these are, I spoke about shareholder, board, and creditor. From government, I have to take no objection from ROC and from the income tax department. Another important feature of merger is a merger is tax-free or tax exempt. So therefore, I have to take a NOC from the income tax department before the merger. There is normally a concept of interim period. I apply on day 0. The merger may take about 8 or 9 months. So there is, in the interim period, how the business is being run. Both the parties agree on how to run the business during the interim period. Let us take an example or a case study of how a merger looks like. Now, this is for a client of ours who had an existing subsidiary in India. So we had our client who already had a company A already existing. They acquired the company B through a share purchase initially. So both the companies are owned by the same buyer. Now they want to merge these two businesses together. Now, company B had considerable investment, very high investment in land and building, and it was allotted by the state government to company B, and it was not transferable. So therefore, while deciding on the direction of merger, we decided to merge company A into company B. Company A was merged into company B. The consideration was paid to the buyer again, same shareholder. And we had an after structure where company A was liquidated, dissolved without any action automatically. And we had a structure where company B had both the businesses. It had a combined business. These are the examples that I have taken. I'm just going to take some, a minute or so to just describe the comparison of these three options. So there is the share acquisition, there is a business transfer, or it is also called as slump sale, and then there is merger. Share acquisition and slump sale take about 3 to 4 months in terms of time taken duration, whereas a merger takes longer because of government approvals, etc. So we already spoke about the approval requirement. Usually, share acquisition and slump sale is a cash transaction where the buyer pays cash for acquisition of shares or business. In a merger, it is usually shares. There is income tax payable on share acquisition and slump sale. Merger is generally tax exempt. There is stamp duty payable as a separate cost on the sale of shares, sale of business. The rate is decided by different states because stamp duty is a state subject. There is no GST payable on any of the three transactions. And in a merger, only in the case of merger, we can actually past losses can be carried forward into the new business also. Tokuro-san, this is the reference to the last few slides. I would like you to please take it forward.
はい。アンカッシュさん、ありがとうございます。はい。それでは次が最後のブロックとなります。最後のブロックでは、M&A を実行するためのロードマップについて、ご説明の方をさせていただきます。JCSS では M&A も豊富な実績を持っております。M&A をご検討の際には、ぜひ弊社にご相談いただければと思います。それでは、アンカッシュさん、最後よろしくお願いいたします。アンカッシュさん、please explain number 9 to 12.
Okay. Thank you, Tokuro. So we will now talk about the main transaction, the M&A transaction roadmap as to how a transaction goes through various stages. So there are three important stages in a M&A transaction roadmap. There is the pre-transaction, where I enter into a term sheet, an MOU with the other party. I carry out a valuation of the business in India, and I do due diligence on the financial due diligence. I do a business due diligence. I do a taxation due diligence and legal. These are the main due diligences I carry out on the company to know about the company business, its valuation, financial liabilities. Legal title are some of the things I check as part of my initial pre-transaction work. Then the other aspect is a transaction. Once I have carried out the due diligence, I start drafting agreements. The agreement could be for a share transfer, or could be for a business transfer, or it can be a scheme of merger. Either way, the drafting of the legal documentation will have to be done. After that, we share, once we have internally reviewed all the documentation, we share it with the seller for their comments and any negotiation around various things like liabilities, warranties, indemnities, and so on, including commercial negotiation also can happen. It can be a result of due diligence as well. I'll come to know certain things. Once that is finalized, I help the companies execute or sign the agreements. Once the agreement is signed, then we move into the next stage, which is the post-transaction stage. In the post-transaction stage, there will be certain conditions. Once those conditions are met, we move into closing, where the money comes from outside India into India. Once that is done, there is a board meeting. In the board meeting, all the matters are brought for approval. And once that the closing of the transaction happens, and shares are allotted, or asset change is made, or asset transfer is made effective. These are the broad transaction steps: pre-transaction, transaction, and post-transaction. We'll move to each of these elements one by one. So there is the pre-transaction. Within that, we are looking at a term sheet. Now, a term sheet, before a term sheet, I will do a feasibility check on the company to understand if they are a good fit for my business. I look at the type of structure I want to go for, whether I want to go for a share transaction or an asset transfer or business transfer or a merger. And then I'll carry out an initial valuation. Once all these elements are available, I'll enter into a non-binding term sheet or a MOU. Once this is done, we will agree in the term sheet that the buyer will do a due diligence on the company. So we will carry out a business, financial, and legal due diligence on the company. Based on that, if there is any liability, any past non-compliance, that will be an adjustment to the valuation, or some conditions that they will have to meet first before I can go forward with the transaction. After the due diligence, the valuation will get adjusted. For the purposes of transaction for FEMA, we have to sometimes do a valuation report, which will need to be applied, given to the RBI for approval. In the transaction, once this is available, we have done the due diligence, we have done the term sheet, we have the valuation, we get into the drafting of the legal documentation. In the legal documentation, we look at key disclosures on title of the shares, on title of the business, title of all the assets, title of intellectual property, employment are some of the disclosures that will have to be made in the agreement by the seller. We take indemnities, we take warranties from the seller, and we come up with a mechanism for different matters, including dispute resolution. Once this draft is ready, we will send this draft, like I said, to the other side, the seller company, for negotiation. So there will be some commercial negotiation that may happen. There may also be some negotiation around conditions that have to be met before the transaction and after the transaction. We also take indemnities and warranties from the seller company, and we try and come up with a mechanism for breach. If there is a breach of warranty, what is the protection that we'll have to take from the seller? Once this is negotiated, we get into execution. During execution, we take board approval of both the companies. We take shareholder approval of both the companies, and we pay stamp duty on the agreement. To execute the agreement, it will be sent for signatures for both the parties. So this is the transaction stage. And the next stage is the post-transaction stage. So once the execution has happened, after execution, the seller and the buyer both will agree on certain conditions that will have to be met before finally money is paid into the company. So there is a CP completion or condition precedent completion that event has to occur when all the conditions have been met. That is when seller will notify the buyer that all the conditions under the agreement has been met, and the buyer will satisfy itself that all the conditions are truly met, and then they go to what is called as closing. Now, in closing, there will be a board meeting which will approve all the matters for receipt of money and for allotment of shares. So in that board meeting, the transaction becomes effective. Once the transaction has become effective, post closing, we look at allotment of shares and we do secretarial filings with ROC for the shares that are issued or the business that is transferred. There will be certain conditions like compliances or business plan. Those could be part of the condition subsequent as well. This is the broad summary of the M&A transaction roadmap. So Tokoro-san, I would request you to take this over from here. I think this is the end of the presentation. Any questions?
ミュートが解除できないです。はい。ありがとうございます。それではですね、予定されていた12のアジェンダ、こちらで全て終了となります。はい。ここからですね、参加者の説明は以上となるんですけれども、 限られた時間、格安の説明となりましたが、いかがでしたでしょうか。すぐに応答の時間に入りたいと思うんですけども、あまり時間がないので、事前に頂戴しておりました。質問の方ですね、いただいておりまして、まず1つ目ですね。こちら
トクロさん、トクロさんの声がよく聞こえていないんですけれども。
お店を畳んだ例も教えてくださいという、質問をいただいておりました。このご質問なんですけれども、以前ですね、弊社で、ウェビナーを、実施しております、インドにおける資料生産、こちらのウェビナーの資料をお送りすることができますので、ご要望ありましたら、この後、画面で
トクロさん、声が聞こえていないので。
はい、続いてですね、ゴーインググリー株式会社、佐生様より、インド特有の抑えるべきポイントについて確認ができればと思いますとご質問いただいております。ここに関してアンカッシュさんに説明していただきたいと思います。アンカッシュさん、please explain.
Ankush-san, Tokuro-san is asking for the query that has come from one of the client that how what are the key implication for M&A in India.
I think the question was about something about do's or don'ts for transactions in India. I think one is, so from a do's perspective, very specifically, we spoke about the roadmap where pre-transaction we carry out a due diligence on the Indian partner. If there is a MOU that we sign, so the MOU generally is a non-binding document, so it doesn't bind you in terms of any specific obligation to purchase. But at the time of term sheet as well, we can do some basic diligence on the seller company. This involves some basic things to be looked at. Like, for example, we need to look at their financial performance, their financial strength. If it's a technology company or if it is a R&D company, it is very important to know the title to the assets or the title to the intellectual property which is involved. So normally what happens in India is when promoters or businesses start working on R&D, the patents are filed in the personal name. So sometimes you will have a business that is representing the entire activity, but the IP or the intellectual property is in the name of the promoter. This can also happen sometimes for land. So company may have a business factory or a building, but the land underneath is owned by the promoter. So sometimes it is important for us before we get into a negotiation or a term sheet with the seller, we make some basic checks on the title of land, the title of assets, even the title of shares, whether the shares have been pledged to any other bank, what kind of bank liabilities are there. So basically, in a nutshell, the idea is to carry out some two-level due diligence. One is an initial high-level diligence, and once when the term sheet is signed or the MOU is signed, we get into a detailed diligence. At the term sheet level, also, if some things are not checked, the good part is that it is a non-binding document. So therefore, there is room available for us to renegotiate the document once we have carried out due diligence. So due diligence is a very important activity to be done. So it's a do to be carried out. At the same time, don'ts is something where we cannot get into a binding agreement or a commitment to the buyer to the seller in India without doing this. So that's a major don't. So don't get into any agreement or binding document with the parties in India unless you have done some basic diligence on the company.
Thanks, Ankush-san. 皆さん、JCSS インドのラビと申します。今日のウェビナーに参加していただいて本当にどうもありがとうございました。で、このチャットスクリーン には、今日のウェビナーについてフィードバックをもらうように、リンクをお送りいたしましたので、それをご参考して、ご意見によってそれを記載していただければ大変助かりますと思います。所さん、over to you。
はい、ありがとうございます。質問の方2つ受け付けていったんですけど、先ほど1つ目の方がよく聞き取れなかったというお声がありましたので、もう一度回答させていただきたいと思います。東洋電機製造の若林様からいただいていた質問なんですけれども、店を畳んだ例も教えてくださいと、質問をいただいております。こちらの回答なんですけれども、以前ですね、弊社のウェビナーで実施しましたインドにおける企業生産のウェビナー資料、こちらがございますので、お送りすることが可能になります。でもしご要望ありましたら、この後アンケート画面で、その旨ご記入いただければと思います。はい。本日のセミナーは以上をもちまして終了となります。お忙しい中ご拝聴いただきありがとうございました。この後ですね、アンケート画面をチャットで皆様に URL を送信させていただきます。さらにですね、詳しいご説明などご要望の皆様はご遠慮なく、アンケート内の最後の欄にご記入をいただければと思います。こちらご記入いただけましたら、弊社よりご連絡させていただきます。それでは皆様、本日ご多忙の中ありがとうございました。アンケートの方よろしくお願いいたします。それでは失礼いたします。
はい、皆さん、ありがとうございます。Ankush san, you can also say thanks to all. We are saying
Thank you
thanks
everyone
to everyone.
for your time today. Thank you.
I think there is one question.
Correct.
Yeah,
We can
I
take that.
yes. Can you? Yeah, I think there is a question from one attendant.
Kikuchi-san,
Yeah,
but we need to
Kikuchi.
unmute Kikuchi-san. Kikuchi-san
Okay,
need
okay,
to.
okay. Just let me see. I'm just trying to do that. Yeah, Kikuchi-san, I have unmuted you. I think now you can ask the question. まあ、もうアンミュートしましたので、質問させてください。させていただけるようにお願いします。Suresh-san, I think he has left the.
がもうそうですね、退出していますね。
Okay.
はい。
Yes.
それまた後から連絡しましょう、我々か
はい。
ら。はい。
そう、これのも